Well, we certainly don't think it's going to turn around anytime soon. As you mentioned, we've got persistent equity outflows, but also on the fixed income side since last May, when Bernanke first began to talk about tapering, we've seen a fundamental reappraisal of the EM asset classes, both equities and fixed income. So on the equity outflows, it amounts to about 6% of AUM for the foreign funds, and that is the biggest that we've ever seen. In terms of the geopolitical risk events, yes, they just seem, unfortunately, to keep coming and coming. And whereas we had previously issues, say, in Europe around sovereign debt or government shutdown in the US, it's the developed world that seems quite quiet at the moment. Well, in terms of the pace of downgrades, it's going at about twice the pace of that in DM, and it's certainly abnormally high. We have the majority of countries and the majority of sectors with downward revisions to earnings estimates now, particularly in cyclical sectors that face domestic demand in the EM world. And it's more of a top-line revenue problem that we're seeing rather than just a margin issue. And until that really stabilizes and improves, I think it's difficult to see markets catching a bid here. Yeah, that trade data that you referred to reversed extreme strength in January. So we get very choppy data for China, and so the situation is somewhat unclear to investors. Broadly speaking, we think, yes, the Chinese economy is slowing again here. We've got a 7.2% GDP growth forecast for this year from our economist, Helen Chow. But when you actually look at the equity market, the conundrum is that it's priced exceptionally cheaply to its own history and also to peers in the emerging world. And yet it has a better sovereign balance sheet and a better underlying fiscal and current account position than some of the countries I mentioned earlier. In terms of countries, we're overweight, in particular, North Asia. That's a key theme for us, and within that, China and Taiwan. And in terms of sectors, we are very interested in the information technology sector, so that's semiconductors, tech hardware and software. That's the only sector of the 10 major sectors in EM that has positive earnings revisions at the moment. We expect the pace of tapering to continue and that the Fed will be done with bond purchases by the end of the year, and it's very unlikely that we're going to see any deviation from that. That seems pretty set at the moment.